Hello, everyone, and welcome to Will's Monthly Market Update. It is April 2026. I cannot believe it is April already. Spring is here, and spring weather in Iowa is about as volatile as the stock market right now. It was 85 degrees on Monday, and sunny. It is currently 45 degrees and raining when I'm recording this. But man, crazy times this year. The market has been dominated by geopolitical events going on around the world. Back in January, we were talking about Venezuela, and then pretty much ever since, it's been all about Iran and continues to be about Iran. And that's my number one topic. Last night, April 1st, President Trump gave his address to kind of update the nation on where we are in the war with Iran, and don't think the market and investors really got what they wanted from it. There was no clear end date. It was just the previously stated 2 to 3 weeks. But President Trump did say that he was planning on intensifying the strikes before they wrap things up, which the market did not like coming into this morning. That sent oil up to about $112 a barrel when I checked this morning, and the market also opened quite a bit lower, giving back about half of the gains we've made over the past 2 days. So any sort of new news headlines, the market has been reacting very heavily to. And that brings me to my second point, volatility. So earlier this week, when there was mention of negotiations between the U.S. and Iran, the market ripped higher. I mean, the Dow was up over 1,000 points. The S&P and NASDAQ also had great days and had a good day yesterday, April 1st, and then this morning coming in on some sour news, and the market went lower again. So super choppy, super volatile times. We definitely are not making any large changes in our portfolios right now, just because it's so much noise being fed into the market around this conflict. But we could hope that once it's over, market settles back down a little bit and hopefully rides the good news upward. But coming into the year, we already expected a volatile one just because of the midterms coming up in November. Historically, midterm elections are volatile. So even as this Iran issue wraps up, hopefully could expect some volatility through the rest of the year. Maybe not as crazy, but still expect things to be volatile. And then number 3, sticky inflation. This again plays back to the Iran issue with higher oil prices. The price of oil stays high, increases fuel prices. Higher fuel prices means it costs more to transport goods. When it costs more to transport goods, companies have to raise their prices to make that up, therefore creating inflation. So again, everywhere I'm reading, if people are saying if oil stays higher for longer, it's just going to not help the inflation front. Now, the past couple of videos, I've talked about higher PPI, producer price index. That's inflation on a wholesale level, what producers and manufacturers are paying. And historically, that tends to trickle down to CPI eventually. It's a leading indicator of where CPI is going to go. And so right now, all things are pointing to higher inflation, or at least stickier inflation, not moving towards the Fed's 2% target. And in that case, I don't think we'll get very many interest rate cuts this year. I think the market is projecting maybe 1 at most. But as it sits right now, I don't think the Fed has any incentive to cut rates any further. And so with all of that in mind, it is only April 2nd. And so when I see you guys in May, it'll be a whole different landscape. Hopefully I can talk about something different than geopolitical conflicts. Hopefully something good. Hopefully there's something good I can talk about. But for now, that was April 2026, and I will see you guys next month. Thanks for watching.